In this video, I'll be explaining how to use Fibonacci retracements and Fibonacci extensions. Fibonacci is one of my favorite things to use while trading. It's super fun, super accurate, and it gives you a really good idea of what levels you should be looking out for. So let me go to the Bitcoin daily chart. I will start off with the Fibonacci retracement. If you're on TradingView, you can just press Alt F or go to the second drop down, and it's called Fib retracement. So there's a few ways to use this. Two main ways to use this. The two main ways to use the Fibonacci retracement is to go from your high to your low, or your low to your high. So you see swing high, that's a deviation. You go swing high to your swing low. And this is the fun part. It's that you get to estimate where your highs and your lows are based on the values and opportunities you're looking for. But then you don't want to manipulate it too much. You want to be very fundamental with this retracement. So let me just explain to you what I did here. I brought the Fibonacci retracement from the all-time high minus this deviation here. That's basically a double top. I'll get into that in a next video, but yeah, that is a double top here. And if we go here, you want to, so that's the swing high, and you want to bring it to a swing low. And historically there's two bottom levels based off this bull run that we had. There's multiple levels that we could be using for a bottom, right? This is where your intellect and your skills come into play. So say this is the previous all-time high. This was the previous pump before the dip and whatever. Very solid. This is very solid support level 2 here. Resistance turns to support, like I mentioned in the previous video. And then for fun, we could drop another one in at the absolute perma bottom, in my opinion, around the 3,700, 4,000 level. You see this covers lots of ranges, 1, 2, 3, 4, and the last dip for the COVID crash. So if I reset the chart here, I'll actually bring it to the weekly chart, and I'll reset that and zoom in a little bit so you get a good idea of what we're going for here. So we go to the second bottom. If we go to the say the bottom, the previous all-time high, we use that as a reference for the bottom for a Fibonacci level. This has been 100% retrace, right? This is 176%. It's 0.786, but they're percentages. And you could also adjust this if you like the way it's set up. You could turn them into percents. See, 100%, 78%, 61.8%, 50%, 38%. It's whichever ones you find more easy to read for you, because this whole point is how to read and understand charts. So previous all-time high, that's a full retracement, and usually after a full retracement, we see a recovery. But say this wasn't, and it was the 12,000 range. Now we broke through the 23%, and it looks like a bear flag. I'll get into that in another video too. But that could also drop lower. And if we take it, we go to the absolute bottom. Skip the absolute. Ooh, the second the bottom. We're hovering at the 23% level, the 0.236, and all these levels are crucial, but the main one you want to go for is the 618. I'll get into that in a second. But all these levels are crucial levels, and it's not a coincidence when you go from the all-time high to the all-time low, second all-time low, that we're magically stopped at this level. This is a perfect Fibonacci retracement from 100% to 23%. And now say we go at perma-bottom. Ooh, the 3,000, 4,000 level range perma-bottom shows that we bounced off the 236% level. And now are we making a recovery? Or we could be in the same trend where we're getting ready for consolidation before a move downward. Right? So this is the base. You don't want to use this, once again, you don't want to use this all in itself. You want to use this with the help of other levels. See, I drop in the RSI here. This is a different one. The Scholastic RSI here. Whoa, now we're at a really low point. And you know what I said? Under 20 is a good buy. And we're basically at 0. But we were also there in this bump. And last time we were there was June 21, the other dip. So this is a very interesting point level that we're at right now, which we could decide an uptrend or a continuation of a downtrend. And you get a lot based on these Fibonacci levels. See, we see 618 has been used as a resistance and support. A support or resistance, a support, resistance, support and resistance, multiple levels. This level right here. Same thing with the 786, same thing with the 0.5, support, support. Now we're at the 236, so that's a big deciding factor. That's how you use the Fibonacci retracement. And the same thing can be done in reverse from low to high. So now we're at a 76% decrease. You just flip-flop it. So now let me go into the trend-based Fibonacci extension. Trend-based Fib extension. It's the second one down on the second tab on TradingView. This is a very good tool I like to use. And in simplistic terms, the way you use it, you're going to have 3 dots. So you go swing low, you find a low, and that's where you start. Find a low, and then you find a high, and that's the high. And then you drag it, and then so that's your 2 points. You go from low to high, and then your third point is going to be a low. And you can decide where this low is, whether this low is here or here, but based on history, you want it to be the most obvious low. See, low, high, low in the same range. So I'll go to this low. I'll even cut out the candle, the wicks of the candlesticks, and make the new low. See, low, high, low. And based off that chart, you can see how this is so I'll get into that in a different video. So you can see how fast and how strong we pumped. We broke from our previous low to our high to our new low, where we started another foundation, a solid bottom foundation. We broke past the 618, the 7, the 100. We went 1618. This is one Fibonacci cycle, two Fibonacci cycles, three Fibonacci cycles, four Fibonacci cycles. We busted through all four Fibonacci cycles, and a good trader would realize that this is about time for a reset, a retrace. Breaking four Fibonacci cycles does not happen all the time. It doesn't happen every day. It happens, but it's a rare occurrence. So when we busted through all four of these Fibonacci cycles, and it happened in about 400 days, well, we broke the fourth one in a year. So in 1 year, 350 and 350 days, the 340th day, we broke through the fourth Fibonacci level. And that's a good sign that we need to cool down. We were too inflated here. And then we retraced to the 200 Fibonacci level. And then you could see we gained the strength to pump back up. And now we're currently sitting at the 161% from using this as the bottom. The extension basically tells you what levels to look out for. So from this low to this high, this low, you're looking for the 100% that broke through. The 168 extremely broke through. See, at the 2618, we saw some consolidation, and then we're like, oh, okay, we might go back down. But no, we went straight to the third Fibonacci level, broke through that, straight through the fourth, and then we came and retested the third Fibonacci level, and then went back up the fourth, and then finally broke down after a few tests of the fourth. It gave up. So that's how you use the Fibonacci extension. And now in real time, we'll do it from this cycle. So from the absolute bottom, I would say May 20, around 37, 4,000. I'll get rid of the wicks. So about 4,000, 4,500, 4,600, 4,500. So that's our swing low, and our swing high, 65, 66, 67. We could even use the top wick of the wick. We could use 70. See this level, 70? Or just 61, 65. But this would probably be a deviation. And then drag it down to the bottom. So what's the bottom? Is the bottom 19, 18, 17, 16? I'll say the bottom is around, with the recession coming, the bottom is going to be, I think 7 or 8,000 is a good bottom, maybe even like 6. But say it's something like that. I'm not saying we're going to get here. This could be the bottom here. But based off that, if we repeat the 4 cycles, you see where we're going with this. And you can just drag this as far as you want to see. Excuse me. But see, if we start to recover now, the levels we're going to have to look out for is a 23%, 38%, 50%, 618, 70%, 78%, 100%. And then we're in the new Fibonacci cycle. So that's 100,000, 168,000, 227,000, 264. So this would be exactly like how I just showed you Bitcoin breaking all 4 Fibonacci levels, if it repeats itself, this would be the levels we'd be looking out for. The 618, the 260%, 360%, 423%. These are all Fib cycles. We can break through like bam, 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 bam. Or we might see rejection at either one. But these are good levels to look at and good things to take into account when charting your charts and looking for take profit points. Long-term macro, this is how you trend Fibonacci. And the same thing works the other way. So before I said swing low, swing high to swing low. Now we reverse it. Swing high to swing low to swing high. So now basically we've completed a whole 100% and 106.18% retrace from the all-time high. And if we see, if we do a 200%, that doesn't exist the other way because we'd be going in the negatives. So that's a pretty good level to watch out for. Then we could recover all the way to the 0%, which would be 100% back up to the previous all-time high. Guys, this is how you use Fibonacci, and this will help you a lot in analyzing your charts, charting your charts, and being able to understand how they move and what could be the next move, what could be the next level to look out for. Thank you for watching.